Hi, everybody. It's FIBO Group, and you're watching to the Market Watch review. Stocks hovered just over bear market territory Monday. Investors worried about inflation and rising interest rates causing a slump in Asian stocks, which led to a drop in stock prices. Stoxx 600 European Companies Index rose 0.7% to 435.7 points. This is about 13% less than its January record high. S&P 500 futures rose 0.7% to 435.7 points, suggesting a steady opening in New York. However, analysts cautioned. At 102.60, the dollar index fell 0.3%. The dollar index rose 16% to a record high of 102.60 in the 12 months to May. Oil prices rose and gold continued its gains. Asian Pacific market. U.S. President Joe Biden will also meet with the leaders of Australia and India during his Asia tour. The Quad is an informal security group that was created to counter China's increasing influence. Official data on Monday showed that Singapore's consumer price index rose at the fastest rate in 10 years in April, driven by higher food inflation. The U.S. dollar continues to fall against the Japanese yen and is poised to test the closest support at the 127 level. The Australian dollar has risen over the 0.70 region. Market of Europe. Christine Lagarde, president of the European Central Bank, said Monday that it is likely to raise its deposit rate from negative territory by September. If inflation stabilizes at 2%, it could increase it further. The unexpected rise to 93 in May of Germany's FIBO Business Environment Index for March, which was expected to fall to 91.4 by the market, highlighted European resilience. Over the next 4 days, the World Economic Forum will hold its first meeting in person in 2 years in Davos, Switzerland, with central bankers as well as the International Monetary Fund taking part in panels about the outlook for the economy and inflation. The euro brokered the 1.06 to 1.0630 resistance zone and is trying to establish a foothold. Sterling continues to consolidate under resistance from 1.2580 to 1.2630. Market of America. Deutsche Bank stated in a note that the S&P index had suffered its 7th consecutive weekly fall since 2001 when the dot-com bubble burst. Analysts believe the U.S. stock market has been more affected than Europe's because it was more overvalued. The U.S. Federal Reserve is more aggressive in prioritizing fighting inflation over other factors. Today's U.S. economic calendar is very light. The Canadian dollar continues to rise against the U.S. dollar, reaching the 1.2720 mark. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.